Welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for February 6, 2010. Our website is blog.accendotraders.com, where we put together effective video technical analysis trading plans on a daily basis. That's right. We believe in the importance of having a trading plan to keep us focused and disciplined. It lets us see what's coming out of the pipe that can affect our open positions, and more importantly, helps us as we're scanning for new positions, new trades. And by being focused and disciplined, it cuts down on our research time so we can have time to spend with our family. Well, the week that was, we didn't end down that much, did we? Of course, anybody that's been watching the market knows that seeing that we're only down 55 or 7, basically one day's move, really doesn't tell the story of what happened this week. We'll get more to that as we get into the internals and the charts, but the market fought back, so I guess that is important. So what we have here is the market once again ending lower for the 4th consecutive week. As they say, as January goes, so goes the year. There's a thought, although you might say something different for last year. But we had a very volatile trading going on this week. We went up for a couple of days, rested on Wednesday, and then we fell hard Thursday, and then we fell hard Friday with a rally into the close. This week we had 8 of our 10 sectors close unchanged or lower. The biggest loser was the financial sector, and we know that especially for the S&P 500, as financial goes, as goes the S&P 500. We had some concerns about Europe and what's going on with their banking system. We had some concerns about Portugal and their treasury bills, and Spain raising its deficit forecast due to Greece. Europe, France, Spain, Italy all declined. Portugal, Greece, they all declined, so that caused some selling interest. And we had jobs claims come in weaker than expected. Jobs claims rose 8,000 to 480,000. That was the Thursday sell-off. We had a 3.1% decline on Thursday, which is the biggest drop we've had since April. Then on Friday, we had the U.S. non-farms also decline, which was unexpected. It declined to 20K. But we had unemployment ease to 9.7%. So initially Friday, we had this huge sell-off of another 200 points, and then we rallied at the end of the day, many believe, off of the consumer confidence numbers at 3 o'clock to make the day unchanged or even close positive. Also, our earnings have definitely taken a back seat to the economic data this week and the world financial situation. So going into this week, what do we have on the economic calendar? Really nothing much. So we'll let the trader sentiment show us what it wants to do, and we'll look more at that at the internals. And you can see we don't have any earnings. It's going to adjust us and no economic data. So again, it's going to be up to the traders. So as we go to the internals, we can see what they're going to show us. We have the update on Monday, but notice that the volume was only almost half of what we had on Friday. So even though we have bullish breadth, the volume was not as impressive as the down days that we had from last week. So good breadth, but not a lot of volume. Still accumulation days. Now, when we look at Wednesday was our kind of middle of the road day, and you can see that volume went down, our breadth went to negative, and also our declines went into negative. So there was an indicator that there was a change in sentiment on Wednesday. But what I really think that's important to show is on Friday. Even though we have the big push down on Thursday, and look at the bearish breadth, that's probably the smallest number we've seen, 3%, 10%, so definitely bearish. But when we look on Friday, 2 things I want you to see: that we actually ended neutral with our breadth after that huge push down. But the other thing I want you to see is this new high, new low. Our new high, new low here shows us negative 32. That means more stocks are making lows compared to making highs. And this is the first time we've had it this year. Really the first time we've had it since I've been tracking this. So I really think that is a true indicator that stocks are making new lows now versus new highs, and that could be the direction that we're going to go to for the short term. Okay, we're starting off with ThinkScriptor's market breadth indicator, and basically showing that each time we've come down to our red line, for the most part, we've saw a reversal in trend. So on the YM futures, we are seeing a reversal trend here on the weekly market breadth indicator. And we did kind of come down here and possibly swing back up. So again, although we do have the person down indicator, sales indicator, we possibly could have a little bounce here before we head lower. Okay, so now we're going to take a quick futures look. We're looking at the YM, and we're looking at a daily chart here. And we can see our lovely uptrend, and we tested the 50, tested the 50. Now we have the break of the 50. And what are we seeing now? Now we see on our rally of Monday and Tuesday and our half day Wednesday here. And then on Thursday, what do? We basically air kissed the 50, and now the 50, which was once support, has now turned into resistance. Now on the daily charts, we broke the 10,000 level that we talked about last week as our target for support, and we basically went down to the swing high here from September, tested that area, and we've come back up. So what we need to do is go ahead and get our futures back above 10,000 to get us, at least to try to get us back heading back up to the moving average, to the 50. And we've got a nice hammer here, which also tends to indicate a reversal, but again, anything can happen. On the monthly chart, we again see the air kiss of the 50 moving average, and now we're coming down, and we do have some support in here of all the moving average. You can see the 10 is the last one here, but the moving average could act as support to get us to go back up towards the 50. And our next area of support on the monthly chart is around 9,300, and you can also see a little bit around 9,600. Okay, now we're going to look at our three indexes, the Dow, the NASDAQ, and S&P 500. We're starting off with the Dow Jones. We broke back down into the downtrend line from October 2007, so we're back below that. See a nice little hammer here. We are, just like the futures, below the swing highs of October here. But we did find some support, again, with that 3 o'clock rally. You can see the volume making this a good day. So, you know, usually these wicks means that we're going to go up the next day, but we'll be interested to see we see a little resistance here. Let's switch over to the monthly chart. And you can see the 50 again being resistance. We're coming back down. We found support here at the 20 moving average on the monthly chart. And so when we line this up, and again, what's real good about this chart is you can see how we've taken back. Look at the push down, and we've taken a lot of it back. And you can see this support here in between October and November of 2008 is basically where we were falling here. So if we don't find support here, we'll probably head down to this next level here, which is 9,600, which matches up with the daily chart. Now let's switch over to the NASDAQ. Here we're basically seeing the same thing. We found support here just below the consolidation of the November-December. We did have a gap down in here. Also matches up with this gap here in November. Basically found support in that range, coming back up. And again, if the sentiment has changed, as we're saying the internals have shown, and obviously the market has shown, as we're below the 50-moving average, you know, you want to go ahead and see a little pullback so that you can short at a better entry level. Now let's switch over to the monthly chart to see if we see anything different here. And what we're basically going to see here is that the 50-moving average acted as support on this push down here, the 50-moving average, which is great. And that matches up with some of this action here in 2006, and we need to hold on to that, or this 2037 level will certainly be an area of support if we break the 50-moving average. Finally, let's look at the S&P 500. The story remains the same. We broke the consolidation of November, December, finding a little support here in some of the breakdown in November, but we need to see a little retracement to find a better place to short. Switching over to the monthly chart, we can see once again the touch of the 50-moving average, just like the Dow, the 10-moving average acting as support. Same thing as we see with the Dow as far as support in this area. and possibly heading down to 1015 if that does not hold up. For the second week in a row, we've run out of time, so we're going to skip our education portion of the video. Great Futures Trading Room. If you're in the room, please send me a message so that you can let me know what your feedback is. A great room, and I just want to know, instant message, email, if you see the same value room that I have. I'd love to get some feedback. Futures Broker, $300 e-mini account, can't beat that. And of course, the Future Trading Plan to jumpstart your trading on futures. Take a second to Ching for our stock traders. We're going to have our portfolio up there so that you can follow us throughout the year. Trade your own risk, and I'll see you next time.